A big part of the economic story over the last couple of months has been the prospect of a trade war. A lot of buzz over that. President Trump has been looking to put his America First approach in play by imposing tariffs and other penalties on imports and foreign investments. Then yesterday, the administration delayed until June 1st, 1 month, its threat to impose tariffs of 25% on steel and 10% on aluminum to some of the U.S.'s closest international allies. So is a trade war in the making, and what is a U.S. delegation doing right now in China? Joining us from Washington, Steve Bell. He's a senior advisor at the Bipartisan Policy Center. But first, let's start with our Asher Westropp-Evans. Asher, trade war or not, and why the delay?
So it seems, although these tariffs were initially put forward as for vital strategic interests, Trump made very clear to state that the steel and aluminum industries were considered vital and strategic interests, and the U.S. has rights under World Trade Organization treaties and under Section 301 of the Trade Act to make sure that they can protect those industries. But now it seems that the true agenda is coming a little bit more clear, as Trump has pushed this delay. He's pushed it back 30 days, which seems to coincide with the ongoing negotiations that are taking place. So if we break down which countries were delayed, it's very interesting to see. So if we have a look, so Mexico and Canada, obviously the NAFTA negotiations are ongoing, and it's very good to have this sort of ongoing leverage. If we look, in principle agreements have been reached with Argentina, Australia and Brazil, and that's again part of this ongoing process that about 30 days or so should be enough to hash out the final details. And then of course we come to the EU, which is a little bit more of a complex story, and there's been talk of retaliatory things that might come into play, and in fact the German economy minister had this to say earlier today.
I am firmly convinced that in the interest of jobs in Germany, in Europe, and in the United States, we need a long-term provision, and that raising tariffs is the wrong way. We need fewer, not more, duties in global trade.
Well, let me go to Steve Bell. Steve, is the administration getting cold feet with the EU, or is this just a negotiating tactic?
I think right now it's just a negotiating tactic. This is actually a very dangerous game I think the administration is beginning to play. What would happen, for example, if the Chinese, who have already indicated they may not even meet with the delegation that's being sent over there because they're not going to be inclined to talk about tariffs with Americans. What happens if the Chinese just simply say, we don't want to talk to you? You have repercussions in the agricultural heartland of the United States, and you have some repercussions for people who are used to very relatively low-priced goods from Walmart and places like that who have a lot of Chinese imports. So there are political consequences to playing this game as hard as the administration, I think, is beginning to do. As far as the EU, the French minister makes a point. Remember, for a year and a half, investment by American companies in America was sort of frozen because we didn't know what the tax bill was really going to look like. Now that the tax bill has been finalized, we've seen more investment. We've seen the beginning of repatriation of monies. The same thing with tariffs. If the tariffs are going to be delayed 30 days or a decision on them, that means there will be some delay on the part of EU companies in making decisions. So the jobs question is a good question to ask. What will happen if tariffs continue to be threatened and threatened?
Steve, on the same issue on the EU, we hear warnings that really from the EU itself saying that this is just going to prolong uncertainty in the market. This is another 30 days of questions of ups and downs. What will that mean for the global marketplace, not just for jobs and the EU?
Well, I think what it does is introduce the thing markets hate most of all, uncertainty. There will be people who will be hedging their positions because they want to be flat, for example, in the equity market because they don't know which way this is going to go. I do think that there is when the president said there's going to be some pain that Americans are going to have to take, as you remember he said that last month, there was not a great reaction on the part of people in what I call the agricultural heartland because they're going to take some pain. But markets are going to be pained also. And I think that this tariff overhang is going to continue to make markets unsettled, and it's going to continue to make our allies wonder precisely what we have in mind longer term. Are they really going to say to Ford, to General Motors, okay, if you put a tariff on, we're going to put a tariff on you. Those companies depend a great deal on the European Union and on China to get their goods bought. And so I think this is a game that could harm America more than help America in the medium term.
Well, Asher, let's focus on this trade delegation heading to China, because that scenario that Steve just described with Europe, China's already moved beyond that step. They've actually outlined and made that threat. So what is that trade delegation perhaps looking to accomplish?
Well, so at the moment, the trade delegation heading towards China, and Trump tweeted just earlier this morning outlining some of the sort of latest plans that are coming out, saying delegation heading to China to begin talks on the massive trade deficit that has been created with our country, very much like North Korea. This should have been fixed years ago, not now. Same with other countries and NAFTA, but it'll all get done. Great potential for USA.
Yeah, Steve, I want to ask you, because I saw the Treasury Secretary, Steve Mnuchin, speaking just earlier today on the news, saying he's not worried, for example, if the Chinese start selling off that American debt that they own. Is the U.S. really tweaking the tail of the dragon there that could end up snapping at its head, biting its head off, the U.S. head off?
Oh, listen, you know, statements like that I think should worry us. China doesn't have to start selling off its debt. All China has to do is to stop participating in our auctions. We have a Fed that will likely raise rates again at least once or twice this year. We have a runoff of the Fed's balance sheet, which will increase the supply of sovereign debt. We have other countries involved who could simply say, well, we're not going to buy as much as we did. A 2 or 3 percentage point sale by China of its holdings of United States debt, which is well over $1 trillion, in addition to these other factors, can really hurt the bond market, which, of course, is something that will be felt throughout the world, not just mortgages, not just interest rates, but will have a negative impact throughout the world. So to be cavalier, which I have to say I think that statement is a little cavalier, the Chinese don't have to put all their debt on sale at once. They're not stupid. All they have to do is simply buy none or fewer and put a little bit of their holdings, especially their long-term holdings where they have very substantial increases in value, just to put a little bit out in the market and continue this supply that most bond traders now see coming. So it seems to me a little tiny bit kind of a straw man to say, well, they're not going to sell all their debt. Well, of course they're not going to sell all their debt. I
believe Steve Mnuchin described this delegation's trip to China as cautiously optimistic, that famous diplomatic term. So maybe a little bit more emphasis on the cautiously from what you say, Steve.